Welcome traders to this week's analysis of gold XAU USD. Thanks for joining me here. My name is Vic. Before we proceed any further, what we should do is actually go back and see what actually happened. Where the gold is right now, what we were expecting, and what actually happened. Because that should actually clarify a few things before we proceed any further. So so remember, in my previous analysis, which was multi-time frame analysis, and I started from all the way, yearly time frame to 3 months to 2 months and monthly time frame. In all of those time frames, the gold is supposed to be bearish, right? So bias is still bearish, right? But on smaller time frames, it can obviously be bullish or bearish, right? Depending on how the structure is developing on smaller time frames. Higher time frame is still bearish, and it will continue to stay bearish until I gave you few reasons, a few levels. I said, if it actually closes below, sorry, closes above this level or this level. So basically 1878 level or so, 1877 level or so. If it closes beyond that, or if it closes beyond 1916 level, then only on higher time frame it will be bullish. Until then, it is still bearish. So market is right here in this leg, it is still bearish. Okay, but on lower time frames, obviously it can be bullish. As you can see, this part is bullish, but as compared to this, it is nothing. I'll come to that in a second. So what we have right now is actually a head and shoulders, which is still available. Remember, we had another head and shoulders which did not work out. The market pushed higher, but this is still available, and market came into this level and started to fall down. I presented an opportunity around here in my previous analysis. There was an FCP zone, and I mentioned that this could actually lead to a fall, and that's exactly how it happened. I'll come to that in a second. But let's inspect what is happening here. So this is simply a downward move, the market is falling down, and this is a correction on that. Now the correction, right, on lower time frames will look like a bullish trend. Okay, but if you look at the whole thing, this is nothing but a downward move, an impulse, basically a correction. Okay, and that correction on low time frames is bullish. Let me actually go to smaller time frame, 4 hour time frame, and then it will start to make more sense. So if you look at the whole thing, this is bullish. As you can see, we have a bullish structure here. Okay, now if it is bullish, then what do you expect? I expect market to continue to stay bullish, right? Okay, that's why the market went up. Now if the market is going above this, right, in the previous high, right, which is around here, let me actually zoom in a little bit and clean this up. Okay, so I'm going to draw that once again. So this is, as you can see, higher highs and higher lows. And if this is bullish trend, then we expect market to go higher and then go beyond this to give us a higher high. Okay, but because market never actually did that, what does it tell you? It tells us that the market wants to go down, because now the market is kind of creating a double top. Okay, so that was the reason why the market is falling from there. And if you remember, I mentioned in one of the updates that if the market actually closes beyond this, if we get a confirmation beyond this, then it could go higher into 1850. But because that condition never came true, we stuck to our bearish movement, because overall the market is still bearish on higher time frame. Okay, so if the market does not create a new impulse, that means the market is still in the previous market is creating a market is going in another direction. Market is basically changing a trend. So this is what it was. That's why this actually fell. Now let me actually show you what actually happened. So this was the original idea, right? I gave you this FCP zone in the previous analysis last week, and I mentioned that the market was bearish. So the market came right into that FCP zone, and we had a very good fall back into this 1806 level. This area, I've been talking about this for a long time. Market makers have been using this entire area as kind of their pivot. They go up beyond this and come back to it. They go beyond, come back to it, go beyond, come back to it. So they are moving around in and around this area. Okay, so just remember that this area is still very important. Okay, so the market fell from there, went into this, and we hit our profit targets. I gave you three profit targets, and I said after that it could reach this 1782 level, and at that point in time I will update you on the new structure. Okay, market fell into this zone, then went higher. Around this point I updated saying that the market could be going higher. The only thing, which I possibly got wrong, was that I was expecting market to come only up to this level here and then fall back down, because 1812 was already kind of level which was already there. So I was expecting market to fall down, but it continued to go back into this FCP zone. Now at that point in time, obviously that is the previous impulse point, remember? So if it had closed above, if it had given me confirmation above, then it would have gone to 1850 level or so. But because we never got a proper confirmation above this zone, that's why the market actually pushed the price back again down. Okay, when it was falling down, it came right into 1782, which I already notified you about. Okay, so I gave you a little bit later on Friday that around 1782 was the next important level. In fact, in our FCP room and in our training sessions also, we were talking about 1782 level and this FCP zone, and this area. This has already been there in the previous analysis. So we were expecting, I'm expecting at some point in time, the market is going to fall to this level at some point in time. Okay, so market came into 1782 level. There was a news item as well, which actually created some kind of little bit of hype. Market went higher. This turned out to be a good trade, a little bit of scalp trade or day trade, whatever you want to call it. Now, what we have is that there is a still possibility. See, if it continues to go higher into this cluster of 1806, then it can still fall back down. Okay, read one level at a time. If it continues to go higher above 1806, then it will go to 1812. If 1812 is broken, then it is going to go into 1828, and if that is broken, then obviously it's going to continue to 1832, 39, and 1850. Okay, but remember, higher time frame is still bearish. So it is quite possible that market will probably come here into one of these levels here, and then it will start to go back down. It will come back into 1782, then this FCP zone of 1777, and in case that is also broken, then it is going to fall down to 1763 FCP zone also. And in that process, it would have cleared this, and it would have created a kind of M pattern as well. And at that point in time, I will look for a long. I will look for a long from this FCP zone as well, pretty much like how we found a long around 1782. Okay, so trading plan once again. If it continues to go higher into 1806, I'm looking for a short. Why? Because the higher time frame move, uh, higher time frame bias is still short, right? For a day trade or scalp, you can still go for a long positions between these levels, because these are these can still lead to very good opportunities between these two levels. If 1812 level is broken and if I get a confirmation, then I will go for profit. I will go for a long position. I can go for a long position, although my bias is bearish. That is why I will not go for huge profit targets. I will be very very careful. I will probably take profits along the way, and as soon as it touches 1828 FCP zone, I will close that long position. Okay, that's the maximum profit I will take on this long position. If it continues to go higher, I'll probably miss that out, or I will reassess the market. So that's on the long side. Okay, if the market comes into one of these levels here, and if I get a confirmation, if I see that the market wants to go down, I'll take a short position, and my profit target will be 1782. That will be my first profit target. Second profit target will be this FCP zone, which is around 1777. And in case the market continues to fall down, then I will go for 1763 FCP zone as my profit target. However, because these FCP zones can act as support zone as well, so I will if I'm taking if I have taken a short position, I will probably close that short position, or I'll take partial profits. And if I see that the market wants to go higher, then I will reverse, I will close short and I will probably take the long position. You see, at each of these levels, you can actually look for long and short positions, because they can act as support and resistance levels. If it reaches 1763, then we are looking for an M pattern like this. Okay, so let me actually go back and show you what actually happened. So this was how the market reacted to FCP zone. It fell down and collected all the profit targets. This area was still there, and this has not been cleaned up. Okay, I mentioned on Friday or Thursday that the market was coming here to clean this gap up, which was 1801, and it was going to going to fill that up, and there was a little bit of scalp opportunity because there was an M pattern forming. Okay, and after that. This was the gap. This was the higher time frame picture of the same thing. So this was the gap which was left, and the market was coming down, and it could go back up. And I was expecting market to go near about 1812, not beyond that, right? So that was I was expecting. Market came, closed that gap, created the same pattern. Okay, then started to go higher, and I was expecting market to just fall from this zone, which obviously did not happen. It continued to go higher into this previous FCP zone, okay, which is basically this one. So market went higher in there. Okay, let me show you where it is. So the market went higher into the same FCP zone, but it never actually went beyond that, and it got rejected from there. So we never had an opportunity to take a long trade beyond that FCP zone. Now, this is what I posted. This is one of the possibilities that I posted, that if the market had closed above, broken and confirmed. That's very, very important. Always read this, okay? Because we have conditions in the market. If this condition is not true, then obviously you cannot take a trade like that. So the market was bullish, as I said right here, but it was supposed to go beyond 1831 to stay bullish. And if it was going to stay bullish, then it was going to reach 1850. But because it never did that, in fact, it got rejected from the same FCP zone, which was here. Okay, 1828, 1830 level. This is the same FCP zone. That's why the market started to fall down, and it gave us this M pattern here. Okay, this is the one I posted just before the news. I think it was NFP or something. So I said, the market could be coming into this 1782 and could push back up. The maximum it could go was 1777, and if that FCP zone was going to be broken, then next was going to be 1763. After that, when the news came, the market hit 1728, 1782 right there at the dot, and started to go up. That turned out to be a good scalp trade. But as I said, it can still fall down. And I'm still looking for a short opportunities rather than long opportunities. Okay, so this is my whole analysis. If you enjoyed this analysis, make sure to hit the like button, subscribe to the channel, and put in a comment below this video. Let me know what is your feedback and what is your comment or what is your own analysis on gold. I'll see you in the next one. Have a great trading week next week.